Hello, friends. This is Ashish Nanda. I head the digital business at Kotak Securities. A very warm welcome to all of you. In the series of webinars that we continue to do, our endeavor is always to inform our clients on the products that we have, which help clients use our platforms effectively. In the line, we are today conducting a small seminar on margin funding. The reason that we are doing margin funding today is that of late, equity markets have been doing relatively well. We have seen a decent rally over the last couple of months, and there is a lot of interest in clients who want to effectively uh, deploy money in the equity markets. Margin funding is one such product which can help clients invest money into the stock markets, uh, or in a different manner, I would say it's a product where clients can leverage money and invest into equities. So I will just take through the presentation now. Can I have the presentation, please? Yeah. There's a small presentation on margin funding. We'll just go slide by slide. Can I have the next slide, please? Yeah. What is margin funding? So this is the agenda. What is margin funding? We'll go through the features and benefits of margin funding, uh, risk of trading in margin funding, because while there are benefits in margin funding, there are risks involved too, and everybody should be very clear to understand what are the risks involved in margin funding. The Trade Free Pro plan, which we have recently launched, which is a very effective plan for margin funding clients who use margin funding, and how to kind of get started and do margin funding on the platforms Neo and KST. So, what is margin funding? This is a question which many clients continue to ask me. A lot of clients who follow my Twitter handle as well, they also continuously ask me what is margin funding, how they can use it. The first thing that I just wanted to make clear to all of you is margin funding is a facility which is available only for stocks, for equity, for stocks. It is not available in uh, not available in FNO. It is not available in commodities, not available in currencies. It is a facility which can be used only and only in case of when you want to invest into equities. It's an exchange approved product that enables customers to invest even when they are short of funds. So, what we are trying to say here is that whenever you want to buy stocks and you do not have sufficient funds to buy those stocks, you can take some leverage from the broker and invest amount into the stock market, which can generally be higher than the amount that you have. So if you see, we have given an example. Suppose you have a client has rupees 10,000. If he uses the MTF order type, Kotak Securities can give funds approximately to the maximum 40,000 rupees, and the client, along with his funds of 10,000 rupees, can invest 50,000 rupees into the equity markets. So this is what leveraging is. Client gives 10,000, Kotak Securities adds 40,000, and the client is able to buy 50,000. But you have to be very careful. This is a leverage. This is a sum which you are investing into the market and buying stocks much higher than the funds that you have. So with 10,000 rupees, you are technically buying 50,000. And if you also notice, orders can be placed with margin funding as low as 20%. So that doesn't mean that all stocks you can buy up to 50,000 by paying 10,000. Every stock has got categories. You can be, so this is an example which I'm taking is of 5x leverage stocks. You give 10,000, the leverage is another 4x, the total becomes 5x, and you can buy 50,000 of stock. But there are categories of stocks, so the leverage can be 4x, 3x, 2x, and even 1x. When I say, for example, 2x, if you give 10,000, the broker will only fund 10,000. So 10 plus 10, 20, you can only buy up to 20. So there is category of stocks, and I will also come to what stocks can be leverage, what cannot be in the next slides to come. So I just to slightly tell you about the features and benefits of MTF. Buy shares now and pay later. So this is what the real crux of this product is. You can buy stocks today by paying only a margin. The balance funds you can pay as and when you have money, or you can also square off the positions and close your MTF position. So if in the previous example, if you give 10,000 and the broker gives 40,000 and you buy stocks worth 50,000, at any time during the tenure of you holding that positions, you can pay the 40,000 rupees from the excess funds which you have. You can transfer as and when the money comes to you, you can give it back to the broker and you can reduce your funding. The second way is you square off the position. So the 50,000 that you have bought, once you square off the 50,000, the broker will take back the 40,000 and give you the 10,000 rupees back. So you can pay off the MTF position in two ways: one by paying in cash, one by squaring off the position. This is a product which allows you to buy, increase your buying power by 4x more. In the previous example that you saw, you had 1x, the broker gave you 4x more. So you can buy up to 4x more. Again, depending upon the stocks, this 4x can be 3x, 2x, 1x, as the case may be. You can, there is no time to which you can hold. You can hold this for a month, for 2 months, for 3 months, maybe even longer. So there is no restriction to the time to which you can hold these stocks. So, for example, if you buy normally, if you buy generally in CNC, you have to pay. So there are three order types. One is CNC, one is NRML, and one is MTF. In CNC, you have to pay upfront to buy. So if you want to buy stocks worth 50,000, you have to actually pay 50,000 and buy those stocks. In normal, what we allow you is, even if you don't have cash but you've got stocks where the margin available is 50,000 rupees, with that 50,000 as margin, you can buy 50,000 of stocks, but you have to pay the next day. In CNC, you have to pay upfront. In normal, you can play on T plus one. In MTF, you can pay whenever you have the money. But the only caveat is, till the time you do not pay, there will be interest that will be charged on the MTF amount that you have borrowed. It's a you can trade both by paying cash as margin. You can also pay stock, give stock as margin and trade. So there is a possibility of paying cashless as well. And there are about 1,000 plus stock. In effect, there are about 1,057 stocks, if I'm not wrong. Yes, there are 1,057,000 stocks, 1057, which you can use for margin funding. I'll go to the next slide. This is just a small example of how margin funding works. So first, let's just take the non-MTF and then we'll move to MTF. Non-MTF means no funding. You are buying whatever to the extent of money that you have. So I'm just giving you an example. If you have got 1 lakh rupees of money, whether in cash or in the form of stocks, you can, margin given by the client is 1 lakh. The total value, he's not taking any funding. So column B is about funding from the broker up to 4x. We are ignoring that in non-MTF column, and we are saying the client invests 1 lakh into the stock markets. So in effect, for a share whose hypothetical example, if the price of the share is 200, the client is able to buy 500 shares at 200, which is an investment of 1 lakh. Now say after 60 days, the price of the share moves from 200 to 250. What happens? The 1 lakh rupee value moves to 1 lakh 25. So 250 into 500, which is 1 lakh 25. So the client makes a profit of 50 rupees a share, which is 25,000. If I reduce brokerage, we have taken an example of 10 paisa brokerage because in our new trade free pro plan, the brokerage is 10 basis points. So at 10 basis points and with other charges, the total cost comes to 560. The client makes 24,440 rupees net gain to him. So on 1 lakh rupees, he makes a return of 24,440. The same thing we'll take under MTF. So under 1 lakh, client pays a margin of 1 lakh. The broker gives him a funding of 4 lakhs, and the total value of investment becomes 5 lakhs. Again, the number of shares will be 2500, because at 200 and with a leverage of 4 lakh rupees, the client can now buy 2500 shares. 60 days, the value moves to 250. The client's total value of 5 lakhs becomes 6 lakhs 25,000. So he makes, in effect, column F, a profit of 1 lakh 25,000. The brokerage and other charges collectively will be 24,000, 2,499. Interest at 975. Again, we have taken the pricing of a trade free pro plan. For 60 days, the interest comes to 6480. Total charges 8979. So client makes a profit of 1,16,021. So what we can clearly see here is, with MTF, you can have a higher reward. Your 1 lakh with leverage, instead of 24,000, you can make 1,16,000. So you get a higher reward. But it is a double edged sword. What if the price of the share from 200 would have fallen to 150? Instead of making 1 lakh 25 of profit, you would have made a loss of 1 lakh 25,000. Instead of 25,000 of loss in non MTF, your loss would have been 5 times. So it's a double edged sword. If the market is favorable, you can make far more money, but the market is unfavorable, you lose a lot of money as well. So you have to be very careful using MTF, because there are risks involved in MTF as well. In the next slides, I will also share with you the risks involved. So we have one slide for that. We will see that as well. So I think I just wanted to be tell you that with leverage, I think the return of 24 can become 116, because you have used leverage money and the share movement has gone in your favor. From this slide, also what you can see is, if the rate of interest is 9.75%, what you have to choose is a stock which you think will give you a return more than 9.75%. Only then will you make money. If you choose a stock which doesn't give you a return of 9.75%, rather with brokerage, this return will be slightly higher, maybe 10, 11, 12, depending upon the period for which you hold the stock. So the lower the interest rate, the chances of your making money is higher. So for example, अगर आपने 18% पे, 18% पे, if you have taken, you have borrowed money, the stock in which you invest should be giving you a return more than 18%. With brokerage, probably 19-20%. Only then will you make money. So lower interest rates in margin funding will always be favorable for a client. Lower the rate, better it is for the client. I need not tell you anything. You are borrowing money here. So when you borrow money, lower the rate, better it is. It is exactly the same. It works for car loan. It is exactly the same. It works for home loan. It is exactly the same. It works for any loan product. This is a loan. It is equivalent to a loan that you are taking, because you are using borrowed money to buy stocks. So lower the rate of interest, better it is. One thing just I wanted to clarify is, we should not mistake this with LAS product, loan against shares. Banks, most of the banks offer loan against shares. This is not loan against shares. Here you cannot give shares to the broker and take money against that. Here the money can only be used to buy more shares from the market. With the bank, you can put your shares, you can give it as a collateral and borrow money. In margin funding, you can only use your margin to buy further shares. You cannot take a loan, so don't confuse it for a loan against share, LAS, as we call it, as a LAS product. Now coming to the risk side, and I have made some notes, because this is one thing that I would want everybody to understand very clearly. I can give you examples where you have made money. 25,000 can become 116. But what you have to understand, it is a double edged sword. If you put money into a stock which is going down, your losses also get multiplied. The way your profits multiplied from 25,000 to 1 lakh 25, here your losses will also multiply. So if the loss otherwise would have been 5,000, in case you have leveraged, your loss will become from 5 to 25. So you have to be very clear when to use MTF and when not to. Risk management is very important. You have to be very clear what is your financial capacity to which you should borrow. Over leverage is not good, so you should never over leverage. You should always do margin fundings in the capacity that you think you should do. Over leverage can give you high amount of losses in case of unfavorable movement of stocks. In my view, you should use margin funding, MTF, margin trade funding, as whatever it is called, only and only when you have high conviction on the stock that you are going to buy. You should put money into only high conviction ideas. You should not put money when you are even slightly not sure of the stock movement. Use MTF only when you are absolutely sure. We call it judicious use. Having said that, it is possible that even if you have high conviction, there can be adverse movement of the stock. You have to be very quick to take action. You have to be very. What you have to please understand is you are also paying 9.75% of interest. So even if you hold a position for a year, say you invest 1 lakh, at the end of the day, if the price of the share is not 1 lakh 10,000, you will still lose money, because at the end of the day you are paying 9.75% as interest, and also some amount as brokerage. So it is important that whenever you buy, you have to monitor this position very closely. If you do not monitor, it can you can have some losses as well. So very clearly you have to be very sure that when you are investing into MTF, you have to be sure that your money goes into high conviction ideas, and you have to monitor. Get out at the slightest of hint whenever, if you don't have conviction, if you think the stock is not moving and you think you are not sure that this will move up, you have to exit this position, because there is an interest meter going on. So monitoring your position is very important. You should know your financial capacity, your tolerance. You should understand the volatility in the market. At times, if you have high conviction but in the short term stock comes down, you have to also ensure that the margin is maintained. So for example, in the previous example, 1 lakh was the margin given to you for a 5 lakh position, which is 20,000. If the stock moves down and the to say 4 lakh 90,000, you will have to replenish the 10,000 immediately. Otherwise, by law, the broker will have to square off your position because you have not maintained the margin. So if you are buying something which requires 20% margin, same example, 1 lakh, 4 lakh, total 5 lakh, 1 lakh over 5 lakh is a 20% margin. At all points of time, you will have to maintain 20% margin in case of MTF. So you have to again maintain margin at all point of time, and you have to monitor these positions as well. Diversification is one way to reduce the risk. I think for any portfolio management, diversification helps you diversify the risk. And so, more the stocks that you buy, you spread your risk. I think better it is. You should be when you take leverage, you should be disciplined. You should not over leverage predominantly. Do leverage within your capacity, and make sure that the stock that you buy is researched well. You have high conviction on it. You believe that the stock will go up. If you buy stock which you are slightly not sure about, I think you should not use margin funding at all. It is a double-edged sword. So high conviction ideas, you buy these stocks, you will get high returns. But if it goes against you, the risks are high. A little bit also on the margin requirements. So when you are going to buy a stock, you will have to give margins. You can give margins in two forms. One is cash, or you can give it in the form of non-cash collateral. You can give stocks, you can give ETFs. So scenario one, you can give margin in the form of cash. Scenario two, you can give margin in the form of non-cash collateral. Of course, there will be relevant haircuts applicable. Uh, so margin can be given in the form of stocks and ETF. Mutual funds are not allowed to be given as margin in case of margin funding. For MTF, mutual funds are not allowed. Only your stocks and ETFs can be given as margin. And again, only stocks and ETFs can be bought under margin funding. You can also give it as a combination. You can give cash and collateral in any proportion possible. So if you're giving 1 lakh, you can give 1 lakh in cash. If you're giving 1 lakh, you can give 1 lakh in stocks. So for example, if you give, say, one stock as margin, say for an example, Reliance, post haircut, you have to see the value of that stock should be 1 lakh. So if you give 125 and say the haircut is 20%, your value will become 1 lakh and you can use that as margin. And again, any proportion, you can give 50,000 in cash and 50,000 as non-cash collateral. You can use it in any proportion. But yes, in case of non-cash collateral, applicable haircuts will be applied. And just to also share with you, we have all the lists available on our website. So for whatever you have to give it as collateral, the data is available on our website. If you go to kotaksecurities.com under the product section, you will find securities that can be given as collateral, and everything is very clearly displayed which all stocks you can give. There is also the margin funding list very clearly available in that link. So all the data of stocks that can be given as margin and all the stocks that can be bought under margin funding are clearly displayed along with multiples, along with haircuts. So everything is available on the website. I would now just want to also share with you the new product that we have launched, which is called Trade Free Pro. You all know that we currently have two brokerage plans. One is called Trade Free, and the other is called Trade Free Youth. Trade Free is for all customers who are above the age of 30, and Trade Free Youth is for all customers who are under the age of 30. In Trade Free Youth, we don't charge any brokerage, irrespective of any segment. In case of trade free plan, our brokerage is zero for intraday, but in case of cash delivery, we charge a brokerage of 0.25. So this is a plan we launched about a month back, which is purely for margin trading facility clients who use margin trading facility to boost their profits. Again, whenever I say profits, I just want to be sure I alert all my listeners that there are risks involved here as well. So again, a small brief on Trade Free Pro plan. It's a newly launched plan. It's a plan ideal for margin trading funding facility users. What we have done here is we have reduced the MTF rate to 9.75%. It is among the lowest rates available in the industry today. You can buy MTF at 9.75%. We have also reduced the brokerage from 25 basis points to 10 basis points in this plan. So your brokerage is also lower and the interest rate is also lower. Needless to say, intraday trades, the brokerage is zero, because again, this plan is also trade free. It is in the series of the trade free plans that we have. So intraday brokerages are zero in this plan, and carry forward is rupees 20 as usual that we have in our trade free plan. The only thing is, this plan has a subscription charge. You have to pay 249 rupees plus GST to subscribe for this plan. So this plan in effect comes for an annual cost of approximately 3000 rupees plus GST, as against similar plans in the market which come for close to about 10,000 rupees and probably 5,000 rupees an annual charge. So it's a plan. While it is as a monthly fee, it comes at a relatively lower cost as compared to many other similar plans in the market today. And it's a monthly charge, so you will be debited in your account at 249 rupees. But yes, what you gain by paying 249 is a lower brokerage. As against 25 basis points, you have to be paying 10 basis points, and a very low MTF rate of 9.75. I think we'll be among the top couple of top brokers. Very few brokers who would be offering these kind of rates. Now, just on how to subscribe to this plan. I don't know whether this slide is very clear to you or not. This is an example of KST. All the users who use KST app, there is an option on the main screen which is called More. You have to click the More option, and under in the next screen under plans and subscriptions there is a trade free pro plan. You have to just select that, and next slide you have to confirm, and your trade free pro plan, you have to confirm here, and your request is accepted. This plan will be applicable from the next day. So if you say accept this disclaimer on a Monday, from Tuesday onwards, this plan will be applicable to you, where your brokerage will get reduced to 10 basis points and your rate of interest comes down to 9.75. This is an example of Kotak Neo mobile app. On the top, there are your name initials. Uh, for example, in this case, you have to click on your initials. Once you click on your initials, you have to click on account details. On the top, under your name, there is something called account details. Once you click that, the last option is explore brokerage plans. The last option, if you see here, is explore brokerage plans. And then you get three options. You have to click the option of trade free pro, and you have to confirm. And on the next day, you can, when you trade, the rates of trade free pro plan will be applicable to you. So this is how you subscribe for these plans. I also have my colleague on this call, Varsha. Varsha, are you there? Sorry, Varsha, is are you there? So let Varsha join. Till the time Varsha joins, maybe I'll just take this forward. How do you, so for starting with MTF, there are three steps: step one, step two, step three. One is, first you have to activate MTF by accepting the disclaimer. The second is place an order for MTF, and third is how to pledge the stocks. So whatever margin you give as non-cash collateral, you will have to pledge those. So there are three steps: step one, step two, and step three. Step one, again, you have to accept the margin funding facility disclaimer. Once you accept the margin funding facility disclaimer, this is on the website. Uh, if you are on KST, it gets activated immediately. On Neo, we have a batch processing, so it takes about 30 to 35 minutes to start. So MTF facility gets activated immediately on KST. On Neo, it takes about 30 minutes to activate. Again, a disclaimer will come. You have to accept this disclaimer, and the facility starts. This is from the website. On the KST app, again, you can activate margin funding, and use the option of margin trading. So margin trading, you have to click and then activate the product. So there are two-step journey on the mobile, which can easily help you activate MPF. This is on Neo. Again, on the order page, there is something called activate. Yes, Varsha, are you there?
Yes, Ashish, I'm there.
Okay, Varsha, in your absence, I've gone ahead and explained a few slides.
जी
I've
जी
explained till now. Probably you can start explaining it from here on,
जी
and
जी
probably then I can join you for Q&A.
Thank you, Ashish. Good evening, everyone. This is Varsha Shikarwar, Senior Product Manager, Kotak Securities. Like Ashish has already explained you a lot about what is margin trading, the features of margin trading, benefits of margin trading, and the risk associated with margin trading. I will take you through. Also, he has covered a lot of part on how you can activate your margin trading. So basically, to just give you a brief on Kotak Securities, margin trading, mein, there are three steps which are involved. Step number one is you activating your margin trading by accepting the disclaimer. Step two you placing your order, and step 3 is you accepting the pledge. I'll take you in detail on all of these three steps. So, like Ashish has already told you how you can activate it. In order to activate, since we have two platforms as on date on Kotak Securities, one is KST, that is Kotak Securities Traders platform, and the other one is Kotak Neo platform. We have users on both the platforms, hence we will be covering the path on both the platforms. So, in order to activate your MTF on Kotak Securities Trader, that is KST website, all you need to do is you just need to go to your profile section. You will find segment access option. You just need to click on that. Below that, you will get the drop down of margin trading facility. As soon as you click on margin trading facility, the system will show you the disclaimer. All you need to do is accept the disclaimer. Just to tell you, accepting the disclaimer does not mean that you end up paying some charges. It's just that the facility, the product type will be available for you to trade. Once you have accepted the TNCs, your MTF on KST gets activated immediately and you can place your orders. This is how you can do it on KST web, where in our application on KST app, all you need to do is you can just activate your MTF while placing your orders. So you need to go to the watch list, enter the stock code that you wish to buy. You will get the order form. Fill the stock quantity that you wish to buy. Click on the arrow which will show you the drop down wherein you will find the product type as margin trading. Once you select margin trading as your product type, the system will immediately prompt you with the disclaimer acceptance, the TNC acceptance. All you need to do is just accept it. Once you accept it, your MTF gets activated immediately and you can complete your order placement journey from there. The journey on on our Neo app is pretty much the same. You can activate your MTF while placing your orders. So you go to your watch list on KST Neo app or web. The journey is on app and web is pretty much the same on Kotak Neo website on Neo platform. You enter the script code on the watch list. You enter the quantity, then your order form will open. You enter the quantity that you wish to buy. You can select your product type, whether you want to buy your stock at the market level or you want to buy it at your own levels. You can edit the price if you wish to buy it at your own levels. Product type you can select it as MTF. The moment you change your product type as MTF, the system will prompt you with a message below. If your MTF is inactive, it will show you an activate button. All you need to do is click on activate. Immediately your TNC pop-up will open. You have to accept the TNC. The only difference on KST and NEO is that on KST, once you accept the TNCs, your MTF gets activated immediately, wherein on NEO it takes 30 minutes of time, post which you are good to place your orders. Now with this, we are done with our first step of activating margin trading facility or MTF on Kotak Securities. Now let's just see how we place our orders on both the platforms. In order to place the order, like we have covered this part already in the previous step, but I'll just again take you through. In order to place your order both on KST app or on Neo app, you need to enter the stock script in the watch list. Click on buy in front of it. Fill the order form details, the quantity that you wish to buy, your stock, whether you want to buy it at market levels or you want to buy it at your own levels, you can do that. You can select that. Select your product type as margin trading facility. Once you do that, on KST, you get an option of reviewing your order, post which the order goes to the exchange. Wherein on Neo, you can simply click on swipe to buy the order and your order goes to the exchange directly. So this is how, and in a very seamless way, you can place your orders both on KST and on Neo app. Going forward to the third step, which is the most important step for you to carry forward your margin trading position to any number of days that you wish to. At KST, it is you can hold your position, MTF position, especially for any number of days, from 1 day to end day. It's just that you are supposed to pledge the stock in favor of your broker. This is a mandatory regulatory requirement guideline which we have to abide by. In order to do so, the order that you have placed on T day, That is today, if you have placed any order, whether on KST or NEO, by end of the day around between 8 to 9 p.m., you will receive a mail and a message from NSDL on your registered mobile number and mail ID with a link. All you need to do is click. This is how the mail looks like. You have to click on the link which will redirect you on the NSDL portal. You would be aware with this. This is just for your reference. We have shared the screens. You will see the stock that you have purchased under MTF. All you need to do is click on the checkbox, confirm the pledge with the OTP on the platform, and you are done with pledging of the stock. Once you have pledged your stock, you are free to hold your position to as long as you want. If you wish to square off your position, you can do it on any day. If you wish to convert your position to delivery, you can do it on any day. But post you have pledged your stock, you can continue to hold your position. Now in order to square off your position, now you have purchased the stock, आपने activate कर लिया अपना MTF, you have bought your stock, you have pledged your stock. Now suppose you wish to square off your position. From T plus 1 day onward, T plus 1 day से हमारे कहने का मतलब है जिस दिन आपने स्टॉक बाय किया उसका नेक्स्ट डे इज T+1 day. So next day you will see your stock under investment tab both on NEO and KST. Investment tab में you have a filter option with which you can filter out your MTF position since investment shows all the stocks whether bought in delivery or whether bought in MTF. You can filter the stocks, the MTF position, click on square off or sell. Whether you want to sell the entire quantities that you have purchased or you want to partially sell, you can fill the number of quantities, select your product. Your product type will default be selected as MTF, and you can simply swipe to sell the stock. So this was all about how you can place orders on Kotak Securities. What are the benefits and the risk of MTF, and how you can go about it with your trades. We are now open for Q&A sessions, so anybody who have any questions related to margin trading can ask me. Are there any questions? Ashish, if you're speaking, you're not audible.
Sorry, am I audible now?
Yes.
Sorry, I'm really sorry. So I'm saying, so with this we will end our webinar on margin funding. If you have any queries, you can free to send your queries through chat and through email to Kotak Security, and we will answer them. You can take use of our trade free pro plan at 9.75%, which is one of the lowest margin funding rates in the market. And lower rate definitely benefits anyone who uses margin funding. So with this, we end the webinar. Thank you, everyone. Real pleasure. Looking forward to meeting you soon. Thank you.